presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom, good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the stock, you and Tim Ward and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off 1 week before we get a Federal Reserve decision. How about that, right? We're coming into a second Trump presidency. 1 week from today, we have a Federal Reserve meeting. We have earnings going on. We got a great show ahead of ourselves. We have Sean Edwards from Direction. He's coming up after the first break. And let's get into the market action as we are positive S&Ps. How about it? Record territory. You know, it's interesting. I saw that ad during the break for Larry and talking about a red market. We made that ad like 14 days ago, and the S&Ps were approaching 5% off the all-time highs. We've had quite a turnaround. S&Ps, we make an all-time high today. We're up by 0.8%, up 46 points at 61.31 right now. You have tech stocks surging higher as well. NASDAQ 100 up almost 1.5%, 316 points in the green, 22,027. Dow up 166. How about 44,404 as I come to you? And the Russell slightly in the red this morning. Now, checking out the dollar because we've had some swings, right? Yesterday's election, of course. Yesterday's election. Monday's inauguration, of course. You get the first hints that maybe the tariffs aren't coming as expected. We have a press conference Monday night. We accelerate back up. From the market for right now, they're waiting. The tariffs haven't come. We have the dollar at 108 from 110. And at least from a market perspective, when you look at the potential for Mexico, Canada, China, not quite yet. Negotiation continues, and the market's okay with that. As we hit 107.75 in the pre-market in the dollar, we're sitting at 108.14, and that is part of the reason that you have gold challenging all-time highs, as we're only $26 above from that 2,800 price point. All things considered, when you look at the run that we've had in the dollar, as I mentioned, from 100, remarkable. All right, speaking of remarkable, how about Netflix? Big numbers from Netflix, as I talked about at the top of the hour there. But, yeah, we're giving up some of the gains, but you're still up almost 9.8%, $85 in the positive. You want to hear something remarkable, though, folks? The options market, okay, we were looking at this yesterday. Think Netflix had something like a $75 move priced in either direction, something like that. So yes, larger than expected, and maybe that's part of the reason that you have people taking some profits off the table to the upside with the type of move that you got. But nonetheless, up almost 10% for Netflix. We jump over the headline. Now, how about this? They went out with a bang. This is the last quarter that they're going to get customer updates. And you want to see what that last quarter looked like? 19 million is the number there. Quite a number, right? You had Squid Game. You had, it's amazing. They call it the Jake Paul fight. It was the Mike Tyson fight. They're calling it the Jake Paul fight. He was the winner, and he put that together in terms of, I think, how that plays out. But nonetheless, big numbers. Where do they go forward? They're raising prices. They're raising prices across the board in most markets, but the U.S. included. Some of the prices, they're going up. They haven't raised prices since 2022. And yeah, you're talking about from $15.99, I think, or something there, $1.50, $2 across the board. But they said that they've been raising prices. They've gone smoothly. And it was kind of a Goldilocks scenario. Yeah, as you're up 15%, but nonetheless, you give it back. How about $9.40? And you put this thing on a weekly. Talked about this. Breaking away from its uptrend channel on Netflix shares, right? Check that out. That's going from the lows of 2022, okay, 162.71. And you break out of that channel to the upside, you pull back, you test it, you're trading it. And how about that high? $9.99 for Netflix shares. All right, other equities with their numbers. Johnson & Johnson down by about 2.5%, as I mentioned. Abbott up 0.8% right now on their numbers. And how about the AI acceleration, man? You had Larry Ellison, you had Masayoshi-san of SoftBank, Larry Ellison of Oracle, of course, and OpenAI, Sam Altman, all at the White House yesterday talking about the new AI infrastructure bill. And check it out, right? I was talking about this morning. Oracle was at 163 yesterday. We opened at 193 today. Remarkable acceleration, but they're all catching a bid on that news. Microsoft up almost 4%, continuing to accelerate there. Yeah, strong numbers. Across the board, too. Look at Amazon, up by 1.3% right now. Google shares, they get back some of those gains. Google flat on the session. Tesla with a little volatility right now, down by 1.3%. They slid lower yesterday with the market. Still sitting relatively close to Elon's number, 420. We're sitting at 418.63 right now for Tesla shares. We jump around to some of the banks. JP Morgan sitting at 263. Bank of America this morning down by 1.4% for them. And let's check out that gold contract briefly. So gold. Yeah, you take a look at gold. And look at the move we've had twice, right? The huge acceleration on a longer term basis. But what's so remarkable is you back this up on a weekly, you put it with the dollar. And man, this run that the dollar had from September, the way that gold has performed, if we ever get a pullback, man, you are going to have the wind at your backs in that gold contract, considering how well we've held up. And the pressure right now is to the downside in the dollar, as we priced in a lot of tariff volatility, and February 1st gets talked about. But it seems like the market's okay with what's going on right now, and they probably should be. As there's some pause, there's going to be a study, right? They're going to study the tariffs. They're going to come February 1st, and we'll find out where we go. Nonetheless, dollar at 108.15 right now. And crude on drill, baby, drill, we pull back a little bit. Yeah, all the way up to $80 last week, and we're trading right now at 75.47, right near the lows of yesterday, which were at about 75.05. All right, what else we got pulled up here in terms of talking about articles? What do we got? Yeah, we talk Trump, we talk Elon, and how about the weather? We got to talk about that, man. I'm living in Florida. It was 42 degrees this morning. I think it's going to be 32 at some point in the next couple days. And if you haven't seen the pictures of whether you're talking about that panhandle, right, in Florida, 7 inches of snow in some areas. So, remarkable. Yeah, and we got Davos going on, too. Jamie Dimon? He's saying stocks might be a little bit inflated. He's been saying that for some time, though. Asset prices are kind of inflated. Interesting from the guy running the biggest bank in the world, and a very intelligent gentleman when he talks about stocks being inflated. And what he talks about in here, okay, he talks about a lot because he's in Davos. He talks about policies as well. Yeah, and here it is. You need a fairly good outcome to justify those prices, right? Stock prices, equity, they are priced for a lot of optimism right now. Will that happen? Yeah, totally. But you better believe that they are priced for a lot of fairly good outcomes to justify those prices. As he puts it, I think having a pro-growth strategies helps make that happen. But there are negatives out there, and they can surprise you. So keep those spikes up on your back, right? JP Morgan, as I mentioned, sitting almost flat today, up by 0.1%. But how about that chart on a longer term basis? From 100 to 263 in just over a couple years. All right, folks, stay tuned. We're coming back with Sean Edwards, Vice President with Direction. We'll be right back. Stay tuned.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We get the S&P's record territory. You get to say that a lot this past year in 2024. Markets powering higher, and we kick off 2025 with another record price. S&P's up 46 points or 0.7%, trading at 6130. To talk about some of the market action, folks, let's jump over to our man Sean Edwards. Sean is Vice President and ETF Institutional Strategist with Direction. And man, we got some market action as usual when we have Sean on. Sean, good afternoon.
Hey, Tommy. Good afternoon. How are you? Happy New Year also.
Happy New Year, man. You know, the expression is we live in interesting times, and it seems like that's always the case, though, right? As in, but not often do you get to say, a couple days into a new administration, we're catching news breaking, we have earnings season kicking off. But what do you think about this market, man?
No, absolutely. And to your point, we're coming off of one of the strongest two-year market rallies since the dot-com era. So we're seeing the S&P continue to march higher. And right now, we're in the midst of the fourth quarter earnings season. Analysts have projected the S&P to have earnings growth of roughly around 12% year over year. So we will see what opportunities present themselves. And I'm here to always, share those opportunities that I think some of the traders will find interesting.
I like
in particular with the S&P 500. I think most of your listeners are familiar with our lineup and one of our flagship ETFs that gives exposure to the S&P 500. So I'm going to just spend a few minutes going through that flagship lineup that gives you exposure to the S&P 500. As I mentioned a little bit earlier, the S&P's coming off a nice rally. We'll see whether that continues, whether you're bullish or bearish. There are some opportunities in the market that present themselves. So our flagship fund, Tommy, you know it, SPXL. That's our 3X bull leverage ETF on the S&P 500. So for those traders who are bullish on the projections of the S&P 500, you can look at utilizing our 3X bull ETF. And again, that's ticker symbol SPXL. For those traders who are interested in utilizing leverage ETFs, obviously be mindful these are tactical short-term trading tools. If you don't want to manage the trading of a 3X product, you can look at our 2X bull leverage ETF on the S&P 500, and that ticker symbol is SPUU. So SPXL is a 3X bull ETF that gives you 300% exposure to the daily movements of the S&P 500, and ticker symbol SPUU gives you 2X exposure to the daily movements of the S&P 500. So those are for our bullish traders. For our bearish traders, you can look at ticker symbol SPXS, which is 3X the inverse of the S&P 500. So on a daily basis, if you're looking to, bet against the S&P 500, you can look at utilizing ticker symbol SPXS. And then if you want to simply hedge your broad U.S. equity exposure, you can look at utilizing ticker symbol SPDN, which is our inverse 1X bear ETF that gives you exposure to the S&P 500. I know a few ticker symbols to start us off, but I don't want to forget about our flagship funds there because they are giving you exposure to the S&P 500 at the beginning of the year. And to your point, a new administration, we're in the first month of the new year, so who knows what the market will bring. So these are just some tools to keep in your trading tool belt to begin the year.
I like it, man. I was jumping through those charts, and as you said, the last couple of years, just on the S&P without the leverage, from 3,500 to 6,100, the leverage, my goodness, I mean, tripling some of those when you're pushing an S&P, even on a triple leverage S&P to triple in price over a couple of years, pretty remarkable with what equities have done. And, you know, you talked about earnings. Those are great numbers that the market is expecting, of course. We had some big movers today in terms of Netflix. I'm sure you saw some bang-out earnings, still up about 10%. We had the bank earnings that kicked things off. Gangbuster numbers, man. I saw the numbers. It was something like $100 billion the banks gave back between buybacks, dividends, just massive numbers, the banks pushing highs. Talk to us about banks. You guys have some outstanding products for banks as well.
No, absolutely, Tommy. The big banks have blown out their earnings. Look at the likes of JP Morgan, look at Bank of America, just to highlight. They led those gains. You saw their investment banking revenues in excess of 40% increasing. So I just want to take time to highlight two of our pairs. The first is going to be ticker symbol FAS and FAZ. So for those traders that are interested in trading the financials, you could look at this pair. It gives you exposure to the Financial Select Sector Index. Again, the ticker symbol is FAS, which is our 3X Bull ETF on that sector. And then FAZ, which is our inverse 3X Bear ETF on the Finance Select Sector Index. So the names that we all can think of off the top of our heads: JP Morgan, Bank of America, Wells Fargo, Goldman Sachs, Morgan Stanley, and even Berkshire Hathaway. So if you are interested in trading the financials, you could look at FAS and FAZ. And even furthermore, if you just think about our interest rate environment with the Fed looking to potentially cut rates further, we may see that financials still have a room to go. So again, opportunities here within the financials, and in particular, the Financial Select Sector Index. And if you are looking to trade the financials, again, those names that we mentioned earlier, you can look at ticker symbol FAS and FAZ.
I think it's so cool, man. I've talked about to you in recent interviews, just in terms of how easy it is to trade a basket of equities sometimes with products like your own. I know, it's just, it's so cool in actions like this. It's amazing to think about. And I was jumping through the charts, JP Morgan, of course, and Jamie Dimon making some headlines today, as he does. We got Davos going on out there.
Yes.
But man, optimism for even the future at these prices, right? Like you talked about the regulations, maybe what is on the forefront, how far they have to go. So we'll find out. And then, you talked about those earnings numbers. So what else do we have? We had healthcare out there today. We have you guys have so many outstanding, fabulous products. But I know Johnson & Johnson was out moving today. Always interesting in earnings season. But talk to me a little bit about healthcare. Not quite the same as the banks as I jump over to Johnson & Johnson charts.
Sure, absolutely. And before I pivot over to healthcare, I forgot to mention those traders that are still interested in the financials, but maybe not the big banks. You can look at our regional banks. Ticker symbol DPST. So to your point, Tommy, we have tools for traders, whatever their opinions are. So again, DPST gives you exposure to the S&P Regional Bank Select Industry Index. So those are our smaller regional banks. If the Fed does decide to cut interest rates, you can look at regional banks as an opportunity for trading. But to pivot back to healthcare, Tommy, to your point, Johnson & Johnson, they beat earnings estimates. So for those traders that are interested in healthcare and you're following Johnson & Johnson and you want to trade the short-term price movements in Johnson & Johnson, you can look at ticker symbol CURE. That's CURE. That's the Direction Daily Healthcare Bull 3X ETF. In addition to Johnson & Johnson, we're looking at Abbott Labs. They reported earnings today, but they missed estimates. And so, again, we provide traders baskets through exposure to a basket of stocks through an index that you can trade whether you're bullish or bearish. And so, again, CURE exposure to the Healthcare Select Sector Index, the 3X Bull ETF. So if you do want exposure to healthcare, you can look at CURE.
And man, those are some charts. You know, we got a volatile market, which traders love, man. That chart of CURE, watch out, man, volatility. Sean, thank you so much for the time, for the update, man. We look forward to talking to you next month, okay?
Likewise, Tommy. Talk to you soon.
Take care. Folks, we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's record territory, and I was just joking with Jacob. We got to get that ad off there. It says in the red, but market's moving so quickly. Quite the bounce that we got going on, and just like that, we're in record territory. S&P's up by 44, and great numbers from Sean from Direction in terms of earnings numbers as we look forward. Banks have delivered so far. Netflix delivering as well. You have Procter & Gamble with their numbers up by 2.2%. You want to check something out for Procter & Gamble, right? Check this out. Look at this nice. You even back it up further than that, right? If you take the lows that Procter & Gamble was at about 2018, we got a nice down uptrend channel. Okay, this is some monthly. We're really going back here on a time basis. Where the top of that channel is, a little debatable. Okay, but nonetheless, you can see how we've been chopping across the bottom of that. And what did we just do? What's so cool is what we just did is we came down, we test that line, 10 days ago, and now we've bounced on earnings, giving it back a little bit today, but still up by 2.2%. And yeah, when you talk about the fabulous lineup of ETFs that Direction has, folks, they are a sponsor, but head on over to the front page of TFNN, check out their banner, okay, and they do rotate the symbols right up there right now, QQQU and QQQD. Bull and Bear Magnificent 7. This is kind of what I'm talking about. And they got many more. Check it out, okay? But it is so cool when you look at the basket of goods that you can get exposure to so simply. So this one in particular, the top holdings, Tesla, NVIDIA, Google, Apple, Meta, Microsoft. So it's so cool if you want to make that trade, right? That you get a little bit of diversification because you just look at it today, a day like today, what do you have? You have Microsoft up huge on the OpenAI news. You have Tesla down slightly, right? We have Google shares flat. We got divergence. So you could have a market bias for that general Magnificent 7, but you got to pick the right stocks. You got to pick them all, or you can just go into a basket of stocks. But today's a good example of how even a trade like that, the Magnificent 7, right? You want a little bit of diversification, a great way to do it. Tesla down 1.5, Microsoft shares up by almost 4%, right? Huge numbers, man. You jump over to Tesla, as I said, down 1.5. NVIDIA shares up by 4.6%. And hey, if they're going to invest in AI infrastructure, what are they going to do? They got to buy NVIDIA chips. That is the infrastructure of AI. The little fundamentals I understand of it, right? And NVIDIA up by 4.6%. Big numbers, man. All right, let's see what else we got going on in this market right now. Yeah, I was talking to Sean about Mr. Diamond, right? Out at Davos. Animal spirits return. Hey, guess what, man? You know, he's talking about animal spirits, but animal spirits in the banks driven by earnings, dividends, buybacks, earnings. Netflix driven higher by earnings, and they're going to make even more as they raise their prices. And yeah, he had some more to say beyond that, but nonetheless. Yeah, in Google, I found this interesting as well. They're trying to keep up. Imagine yourself in Google executive suites this morning, okay? Where are they, right? Microsoft is in the room with the new deal with the president, $100 billion. They're in the room through OpenAI. Where's Google? Well, Google's like, we got to do something. New $1 billion investment in Anthropic. Yeah. In generative AI startup Anthropic, the fresh funding builds on Google's past investments of $2 billion and 10% ownership stake. But the race is on, man. And you're seeing it with Google as well. Yeah, and talking Netflix, you talk about numbers, man. Now, it is interesting, right? As I mentioned, they're not going to report quarters anymore. That's it. And that's how they go out. What they're going to do now is they're going to tell you earnings and they're going to tell you revenue. But what I expect is they anticipated that they were going to get a dramatic spike initially, and now their subscriber growth is going to disappoint at a time when they monetize those subscribers on a greater basis through advertising. And that's probably the greater path to profitability. That's what the market's saying right now. And hey, listen to yourself. I myself recently just changed from the main plan to an ad-supported plan. And I walked it through today. You do that, folks, you save $10 a month, you save $120 at the end of the year, and guess what? Television ain't that important, no matter how much money I have, that I'll watch a few ads when I want to watch Netflix, and I'll get $120 extra at the end of the year, and they're going to make more than $120 off me throughout the course of the year by forcing ads upon me. And that's where we go. But nonetheless, big numbers, and they raise prices. And yeah, revenue growing 16% to more than $10 billion for the quarter, the biggest gain since late 2021. Sales will grow faster than predicted this year, 2025. Yeah, 2025 is no longer next year, it's this year. And for the year, they're looking at $44.5 billion in revenue. Big numbers, man. Yeah, and how about the phones? The battle is on. Samsung, ultra thin. I want an ultra thin phone for sure. Samsung plans to launch an ultra thin version of their Galaxy in the first half of this year, beating Apple to the promising new category. Now, Apple's been facing a little heat, man. You jump over to Apple, right? Barely positive today. I just told you the S&P made all-time highs. How often does that happen where you have the S&P making all-time highs, and meanwhile, you have the biggest company in the world pulling back 15%? That's what just happened, right? From 260 to 220, Apple shares back to where we were on June 12th. Yeah, just like that, man. And you're not far off from where we were trading in July of 2023 when you were at 200. A lot of optimism built into this market, as Mr. Diamond's saying, and that kind of points to it, where you got a company like Apple dropping 15% as we have the rest of the market pushing all-time highs. It's going to be interesting to see if you can get a little bit of a rotation, if you get Apple weakness, and who picks up that slack. Well, we know who's picking it up right now, right? Netflix, Microsoft, Google. Look at that, right? Nothing near the pullback we've experienced in Apple. Even Tesla carrying it to a degree, but we've waned a bit from 488 to 416, but they matter as well. What else we got pulled up? Yeah, this one. So talking about AI, right? I mean, just the drama of this alone. I don't know how long it's going to play out. We're 2 days in, and you already have headlines. You don't think Trump sees these? Whew. Now, I'll deviate because that's not really market-oriented, but you better believe it is to a certain degree, okay? Because you see the way that these equities can move on that type of investment, and then you see somebody like Musk who has that type of influence undercutting. What's going on there? Yeah, they don't actually have the money, right? Claiming that they don't have enough money to fulfill their high-profile pledge to invest $500 billion. Not often would you have somebody roaming the White House with his fair say, coming out publicly to push back on a venture like that where the market reacts like they do today. So, what does that mean as traders? Volatility, folks, as the market tries to figure out where rhetoric meets reality meets policy. And that can be, we got a volatile market. S&P's up 42, NASDAQ 100 up 301. I'll be right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. And yeah, you jump over front page of Wall Street Journal, right? I mean, it's clickbait to a certain degree. Okay, they sell clicks as well. I love the Journal. Don't get me wrong, but yeah, you can't help but put a headline out there when you got Musk battling Trump on something that was so well received, something like that, right? As in, yeah, we'll see how it shakes out, man. And I'm not necessarily saying that Trump will push back on him, but maybe then Trump, who we know how Elon feels about OpenAI, as in he's not that big of a fan, to put it lightly. And nonetheless, the battle, but pretty remarkable, right? You put that front and center, probably not what Trump wants. Front and center. He'd probably want one of these headlines, right? Trump's war on DEI. Trump threatens sanctions, tariffs on Russia if Putin won't end the war. What's the top headline, though? He's no fool, man. Anyway, got to pay attention because what's looming there, right, is what if Trump comes out and changes the deal or something like that? And you see the market reaction they have off that type of move yesterday when you get that type of a deal with the government. And we need it on OpenAI. Or AI. I just call it OpenAI, right? But you do. That is a move on Microsoft, man. We got the high out here. The recent high about 455, 450 area. We're trading at 455, 445 right now on Microsoft shares. And yeah, Amazon's having a run, man. Yeah, all-time highs today. To 235, we give up some of that move. What's the high back here? You want to see it close over this high. Sitting at 233 is the high from December 16th. We're trading just above that at 233.91 right now. Yeah, maybe a little bit more volume. So we've had a little bit of a wane in volume. You back it up to Friday's action, 42.3 million, 39.9 million, and we're at about 27 million today coming into the closing bell. So you do want to see a little bit more volume, but hey, as Sean was talking about, you talk about a move over the last couple of years in this market, man, right? There's an example for you. Amazon, up 200% off of the lows of about a couple years ago. Jump over to Meta shares. Yeah, 200%. What is that? Up 500%, something like that. 400% from $90 to $620. Meta shares trading up another 1.5% today. We jump over to Salesforce, up by about 1.6% today. Man. Palantir, look at this move across the board, up by 5.1%. You got highs out here of $84. This thing, you talk about a run. And this is remarkable. I was talking to a friend today, and you take a look at this market, okay? We live in interesting times. Everybody lives in interesting times. That's why it's the expression, but we live in interesting times. If you've owned equities since the lows of 665, March of 09, the only real downdrafts you've ever experienced in the last 16 years was the COVID pullback and then the 2022 pullback in the markets. Now, they were substantial pullbacks, COVID especially, okay, but you're talking about a 16-year period where you go from 665 to 6126, and the pullback we had in 2022, while it was strong, it didn't even take you below the pre-COVID levels, and we all kind of had this feeling of remembering when the market pulled back so dramatically in COVID to 2,100 and change. Well, geez, if we could ever get back to pre-COVID levels at 3,400, and that's not even where the pullback got you in 2022. Were you really taking heat if you never went below where you were coming into COVID? Didn't feel like it. Yeah, it was a harsh pullback, but if you stayed the course, 6,100. Point being, you back things up to the run that we had from 2000, where you had money in the market at 1,500, and you had to wait 13 years to get that money back? Yeah, 13 years to get that money back. Okay, now, here we are, only 10 or 11 years later, and you've quadrupled it since that time. You have long periods of consolidations. You have accelerations. We are in acceleration, and it is driven by real earnings, okay? You could make the case here that, boy, the reason why it took us 15 years to get over the 2000 dot-com bubble is because companies called anything.com were trading at multiples that were fantastical. But you know what else you had going on in the year 2000? Is you had companies like Cisco trading at $82 that we've never gotten back to, okay? That was not an imaginary company. That was a company built on multiples that it never lived up to. Now, this isn't some wild bearish take in the markets, but it's kind of what Jamie Dimon said, okay? Things are priced for everything to go very well, which they are, but sometimes there's some negatives and sometimes they sneak up. And that's where diversification plays a role. And I think just the context of the run that we are in these markets. Now, like I say, if that is the case, I think we have some volatility coming down the line because there's a level of uncertainty, whether it's in yields, the dollar. We got some strong companies, and AI is going to be a generation changer, much the same way that the internet was. So that's going to allow profitability, right? Efficiency across the board. But boy, it is remarkable when you look at a chart like this and realize that maybe we might get an area of consolidation, and the only way you get stocks going flat for 15 years is if you get dramatic pullbacks in the process, okay? And it's just something you want to be aware of the risks, you know? When you talk about retirement money, myself, Tommy's especially, right? Fully invested in growth stocks. In the future, yes. But when you talk about a horizon, there's just some risks out there in this market with where you're priced. And it is driven by profitability. But boy, you know, just interesting how fast time goes when you look at those types of runs in that market. But today, another all-time high, as we've said. All right, and as we mentioned, let's jump over to yields. Back to a 5-minute chart. Yeah, no huge moves throughout the day. We were right where we are at about 11 a.m. this morning. We're trading at about 4.6% on the 10-year. And you jump over to the dollar right now, chopping around about 108.20 for most of the day. Gold sitting at 27.70. Gold is strong, man. Jump around to some of the gold equities. Harmony. Look at these things on daily. Yeah, look at that $8 area on Harmony, right? And, you know, where's that line exactly? Okay. It's art, not a science. Use a little linear regression. But you can find technical areas on equities, folks. Okay. This is a perfect example of it. Now, of course, Harmony is going to be trading with gold. But look at this equity. All right. Look at how many times this level, whether it's $8.50 to $8. All right. And we bounce and boom. We're back at 10.45. You have highs out there at 12.29 for Harmony, but you're pushing that level. Jump over to Hecla. Yeah, quite a different story, right? A couple others I was looking at earlier. I am gold. Negative today, but right up against those highs of 637 out there. We jump over to New Gold, NGD. Yeah, breaks out of the channel, trying to get back in it. We'll see if that happens, but positive today. Just off the highs at 325, trading at 283. All right, we got markets giving it up a bit. We'll see the final 10 minutes as we come in. We got S&P still up by 38 points. NASDAQ 100 up by 284. We got 10 minutes left to go in trading. Stay tuned, folks. I'll be right back to finish up the show.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps up by 40 points, 61.25. NASDAQ 100 up by 309. You got Netflix shares higher. I'm jumping over to D.R. Horton, the home builders, right? Yields, of course, on the rise recently, and the home builders, not enjoying the euphoria of much of the rest of the market. You're pushing 200 earlier last year, as in September of last year. And you pull back to 140 now. They're up by 2.2% right now. There's the volatility on their numbers yesterday. You jump over to Lennar, volatility on the numbers as well. But there's your 3-year weekly on Lennar from 193 to 136. But jumping back to D.R. Horton for a moment, because they're strong numbers, man. Yeah, not the euphoric area of 200, but look at this thing longer term. Right, a little bit of a pullback, but my goodness, you come into 2021 at 106, you come into 2020 at $70, you come into 2020, $50, just a huge acceleration. So we've pulled back to where we were at the start of last year. But check out these numbers. Now, they have a problem in that they have to spend money on incentives, okay? Our incentive costs are expected to increase further on homes closed over the next few months. You better believe they are with yields where they are. Do they have the room to allow for that? They do, folks, okay? Profit margin, gross profit margin, 22.7%. I tell you, folks, they got homes around me. They're great homes. They're homes. They're brand new. They're in nice developments with nice shared pools, playgrounds, right? The whole deal. They build out the whole neighborhood. One in Lakeland. I think it's pushing. Might be Bartow, Florida, Lakeland. I think it's Bartow. Pushing like 1,800 homes, single family. The development between Lennar, D.R. Horton in my area. 23% they're almost making. Now down 90 basis points, okay? Sequentially given higher incentive costs. That's a problem, yeah. But how many houses did they sell? 19,000 in 90 days. Talk about an operation, man. Revenue, 7.61, but down from 7.73. As in, they'll be fine, folks, but they have some problems, but they'll be fine at these levels even. This market, look at that one. Folks, thanks so much for tuning in. I'll see you tomorrow morning at 9 o'clock. Have a great night, everybody. We'll see you tomorrow.
Building